Shanghai just built a vault for silver, number that shocked me on Friday. And now everyone is acting like it's just normal behavior in the market. And I wasn't making plans for this video. I'm trying to get out of the house, but staring at my phone and thinking, wait, did that really happen? I was standing, I thought, why is it that I put on my shoes? No one is explaining what this really means to you. Means? It makes me mad because the loudest headlines are making you lazy. I believe you deserve the answer and the headline about the Shanghai vault that no one saw the whole thing. Here it is. It's Sunday, February 8th in New York. Tell me what day it is and the day you are watching from. And quickly, I need to do one thing before we can start. Campaign to get rid of channels that copy other channels. If you like this kind of breakdown, please subscribe our channel for latest update. I know you're on my side. Now let me set the scene because of what happened in China. This week's news is more than just about China. It's about pipes. It's where is the story of the metal really sitting? And usually those stories are important, before the market makes everyone look stupid. Here's the punchline first, let's go back. The silver that was said to be sitting in the main Shanghai futures market, the interchange warehouse system, went down to just less than 350 tons on Friday. And it wasn't a slow drop. It was one of those moves where you blink and the number changes like someone pulled a cloth for the table. The day before it was a little over 400 tons. So what we're talking about is a drop of about 60 tons, which is what it is in the morning. If you're thinking to yourself, okay, that's cool, the numbers in the warehouse change, why? Why should I care? Good, keep being skeptical. The first trap in this market is to read every headline about inventory like, the end of the world is coming. It happens, yes. Sometimes it's just a matter of keeping track of things, what the stated drawdown means and what it doesn't mean. The only way to tell the difference is by seeing what else is happening and what else was happening at the same time. At the same time, the prices of things it was not easy to pay for silver in China. Saying the same things as the West, there was a clear gap. Some days it's a few dollars and some days it's closer to 10. And at the height of the recent, the gap got into that, trouble. There aren't any rounding errors there. More like $10 to $20, depending on that's not just a product, it's even more. That's how the market works. It's a fun fact to know, screaming in two languages that it doesn't agree on what silver is value. And when the market doesn't agree, one of two things usually happens with price. What's next? The gap gets smaller, or because the gap or demand goes down, closed when someone goes looking for metal. And that second choice is where things get hot. Before you start now thinking about secret tunnels full of silver, let's talk about how this really works. China has a huge futures market. For metals, it's not a small sideshow. It's a big place where dealers, money, manufacturers, and funding all come in, and the deals are real deliverable. That's important because when it begins with a contract and ends with delivery, the warehouse system isn't just it's a spreadsheet. That's part of the deal. A lot of people in the West have silver. By getting exposure, they have futures, they have things and money to sell that keep track of prices. That's fine until everyone tries to leave through the same door at the same time. In China and in terms of culture is more likely to worry about structure, the part of the deal that has to do with the body. Not always perfectly, but more often than not. So when you can tell that China is paying more than. The difference in silver prices between China and the West, why it matters West, you should ask if that's true. Is there a piece of metal that pulls on it, or is it a signal that has been messed up by the locals? What are the fees, limits, and rules for trading? Yes, those things are much more important than most people don't want to say it, but they do. China's markets have daily limits on how much can be traded. On some things, when things change too soon, the price can hit a limit and just stop. That can keep people from moving forward. It can also offer odd discounts and extra charges that don't exist in a market that is really free. And just recently we saw exactly that. Things made of silver that are related in China hitting their daily goals again and again. Restrictions that made it impossible to trade stopped in at least one case because the prices got so crazy. This is what it says to you. New and important isn't just about the basics. A lot. A lot of what you're seeing is the market structure that is under stress. Let's now bring that number for the warehouse is for one day. A drop of about 60 tons is not, you can wave away anything. Even if some of it is moving around in the office, it's still moving. Metal is still there, somewhere. And if it went anywhere, someone wanted it to be somewhere else. So this is the question I want you to answer. If this is just people who want to make money, why are the people in the warehouse playing games? Being emptied? Because that's how it usually goes. Speculative games are games that you play on paper. They're games of leverage. They're people pressing buttons. They don't need forklifts. And that's why and the part that got people's attention. What really makes me lean forward is the quickness, because reports from the warehouse don't change that fast unless someone is doing something on purpose. Either a lot of people are taking metal out. Maybe one important person is taking a lot out, or the exchange is getting a new name, what's in and what's out. And that last part is very important. Let me say it like a normal person would. Person. A number for a warehouse doesn't always means you can get to it tomorrow. Some metal has been signed up for delivery, always busy, and sometimes the biggest. The move is just a change in status, not bars. Leaving the country. So yes, a record. A low number is a warning light, but it's not a full diagnosis. It's one way to tell the hidden factor, limits, friction, and why premiums stay high the dashboard. This is why nuance is important. If the metal is being taken out of warehouses for exchange and into, it can feel like the market is in private storage when tighter, even if the country still has. There are a lot of bars in general. That's not hard to deal with when there isn't enough. That's a trust problem. And a trust issue can lead to prices are more of a problem than a lack of supply, because trust changes how people act. If manufacturers stop thinking that they can get metal when they need it, stop making things better, they start to hoard, they start to order too much, they start getting supplies faster than usual, and that's the kind of behavior that turns a normal market into a stampede. Now add a fee from the city on top of that. Yes, demand can make prices go up, but it can also happen when you rub against something. Taxes, paperwork, interest on loans, and the fact that most people can't do it. Take advantage of the gap. When you look at a tennis $8 spread doesn't mean you can make money in bars. The extra cost is like a heat map. It shows you where it doesn't say, but the pressure is going up. You know why, and that's why I don't like it. The lazy idea that China is paying more so the world is out of silver. That's clickbait. Real-life markets. Don't do that. But I also really hate the opposite lazy view that says it doesn't matter because it's just taxes. Even if a premium lasts, it still does. It changes, but taxes are a part of it. It still changes where the flow goes. Metal wants to stay the same, but it keeps changing. How people act. Okay, now let's talk about the volatility itself, because it's part of the story, the things you got, but it's told in a dumb way a lot of the time. We saw a steep drop in the middle of the teens, and then a rebound that looks healthy on people like to talk about the graph, as panic, as relief, and finally as normalcy. But the more interesting reason is the market had to get rid of its debt. When a market has to deliver, it doesn't care what you think. It does care what you can afford. Margins go up, people who trade lose money, and the volatility engine, higher margins and forced deleveraging can't get pushed out of the fund. That happens, not just in one country, but all over the world. And when it happens in a market that the move in price looks like it is already thin, a heart monitor. Now here is the small most people miss this point. Forced deleveraging can really help. Tightness in the body. It sounds like it's going backwards, is that right? But think about it. When longs get flushed, the price of the headline goes up. Drips, which could pull in physical people who buy things who don't mind the noise everyday sound. The amount of paper goes down, and the real people can buy things around the world without saying a word. The type of place where you can even see inventories go down. As the news screams crash, add something else that has been happened recently. Speculative fever, not just silver, but all metals in Asia. Many contracts have seen crazy participation, a lot of money, and retail. When a lot of new money comes in, it changes the way people act. When a lot of people come into a market, price discovery happens. People chase each other around, and then they throw up and then chase again. And when that happens, when there are rules about how much you can spend each day, makes these strange cliffs. Prices went up, a limit, trading stops or slows down, and everyone gets stuck in a place. They can't leave for a fair price. Now this is where it goes back to the short story about a billionaire in a market. A big, well-trained short can do things like that. It can also make a lot of cash and become the villain in the story when the crowd loses. So when I hear those in charge, I might look into it, but not right now. I thought, wow, they caught a monster. Is this really something you have to do? Or is this a valve to let off steam for people maybe angry? Either way, it could happen. And if it's a real activity to enforce, the market can be affected right away. Not because a regulator waves a wand, but because risk managers do math. If there's a chance that your job will become, if something is politically toxic, you make it smaller. You don't wait for the news. If it's a valve to let off steam, then the market could just shrug and keep doing what it was doing since the flows below are still there. So this is the cliffhanger. We won't know which one it is until we pay attention to how people behave in public, the stock, the interest, and yes, I did say open interest, even though I'm trying to keep this easy because it matters. If positions are closing all over the place, that tells you that the market is becoming less risky. If positions stay high, while that means when stocks go down, risk is going up, not down. Now the chance of short covering and the talk of an investigation, careful framing. I want to add one more thing to the context. People skip this part and then be blindsided. Silver doesn't live in a vacuum. It is at the crossroads of cycles of money and making, when manufacturing is going on all over the world, while humming, the need for industrial silver to rise. When solar panels are put up, gets faster, and silver gets pushed into supply chains. When electronic silver is taken out as production picks up. When car companies start making more, silver gets by using sensors and electricity. Pulled. And when money gets scared, when people don't trust money, when rates are unsure, when there is geopolitical stress. As the price of silver goes up, it also becomes more valuable as a hard asset. Exchange of goods. That's why it acts like two different animals based on some weeks it acts like a metal for factories. Some weeks it acts like a metal for fear. And right now it's being pulled in both directions. There is a need for industry on one side, that not because of a trend, but because it has been going up, but since modern infrastructure uses. On the other hand, materials that conduct, you have a hypothetical participation that can change overnight. So, the truth, who wins in China, is the question. If, as you'll see, it's mostly industrial pull, ongoing physical drawdowns, and a premium that won't go away. If it mostly speculative froth, as you'll see, lowering premiums and warehouses that are closing down demand, and a market that stops working after the audience gets burned. And if it is, you'll see the most annoying of both the end result, chop, volatility, and sudden jumps that make everyone think they're behind. That's why the next week is important, because it is the next week. We'll tell you if the Shanghai draw was a one-time shock or the start of a longer drain. And if it is the beginning of a longer drain, the next question is the one that no one wants to answer. Say your answer out loud. Where does China get? Where did you get the next bar from? Now this is helpful, not just scary. If you hold on to your physical items for a long time, the first job is mental. Your job is not to let the quote put you in a trance. It's your job to understand what the quote means. Moving. If the story behind it is the East is making a list of things, and bidding up metal makes things unstable, a signal with noise on top of it. If the story is speculators are fighting if the product is locked in a limit, then volatility is a choice that makes you think, story or real flow, the whole thing. If you trade, the first step is to find out how risky it is. Silver is not a place to sell ego. It is a market for the size of the position and sleep. If the move is making you look at your screen at 3 in the morning, your size is wrong. And, yes, I know everyone says that after the truth is still true. Now One of the most amazing small signs in this is all about a lot of the "it looked like retail" was the main thing going on in China. When metal starts to move like a meme, you see the same things happen. Big inflows, things that cost more than what they really have, and then all of a sudden stops when the machines can't keep up. That's not a moral judgment, it's just a description. And when retail gets just because someone gets involved doesn't mean the story is not real. It means the story gets bigger. A small fire can turn into a big one in a store. I have a question for you though. Do you think that most of the stress in Shanghai is real industrial pull or mostly speculative froth that is coming in the system for the warehouse? Please tell me in the I want to know where comments are, because this is the second one and it's where your head is. If you had to pick one sign, would you watch this week? Which is better, China or the West? Do you want to see the vault inventory prints? Which one do you think is the real lie? Detector? I also want to say something about the so-called short again, but this time from a people hear a lot of short news from a skeptical point of view. They think of a bad guy right away. Sometimes there is a bad guy. Sometimes it's just a cover for real metal, kept somewhere else. Sometimes it's a spread trade. A customer might be one of them. Markets aren't tidy, so this is, what if you look at it the other way? The short story about the billionaire is used as a story cover for many things that don't have anything to do with each other, like changes in margins, liquidity and speculation during the holidays blow-offs. That matters because of the markets. Love a bad guy who is clean. A bad guy makes people click, but the tape doesn't care. The tape cares about your bad guy. Flows. And the biggest flow in this. The story could be simple. People from China who buy the worldwide ripple, the flow of goods, the pressure to find new sources, and the mood were willing to pay, and silver moved. Toward them. You don't have to do that. Need a plot to explain that you only need a bid to get a drain in the warehouse. An offer in a thin market can do more too. What does that mean? Rumors can hurt more than anything else. Does that mean prices have to go up a lot next? No, not always. One fair thing to do is the end result is something boring, silver. Cuts sideways for a while in some place between the middle of the 1960s and the middle of the 1980s, because the market needs time to work things out. The shakeout of leverage. That sort of people who invest normally think the range is very wide. For silver traders, it's a Tuesday. But here's the catch. Markets that are range-bound are where the next big thing is created. People go there to get their places back. In a quiet way. There where laziness returns. And then, out of nowhere, you please print out the inventory again. Policy whisper, another event with a limit. And people should keep in mind that silver can move quickly. So what would make it go? 1. Long-term depletion of stock in Shanghai that starts to pull on the world supply chains. 2. A new blast in the China premium that never goes away after the excitement dies down. 3. Forced short covering, whether it's from risk managers, regulators, or just plain pain. 4. A big change in the dollar, the economy, and interest rates moves. Actions that lower risk that put money back into real estate and other hard assets. The last one is where the new situation is. Matters since the macro right now. The background isn't calm. You've got tensions between countries. You have people who invest are worried about the central bank. You have a big government that is reliable, needs to borrow, and you have markets for goods that have already showed that they can go up and down off a cliff. That kind of place makes people want to keep going and then panic at the worst time. And silver turns into a cooking under pressure. I'm not saying you don't have to buy anything. I'm not going to tell you. The 5 signs tell you what to watch next week. To sell anything. I'm saying this to you when you see a real hub pay up and at the same time bringing down reported. If you see stocks, you should stop scrolling and pay attention, because this is how squeezes don't start with a big bang. Headline with numbers that are boring on a report from the warehouse that most people don't read, and then all of a sudden everyone knows everything. Let's go over the mechanics one more time in simple English. If China is spending more than the West, there isn't to send metal to China. But it doesn't happen right away. It needs to be planned, filled out, and sometimes approved. In some cases, approvals. In the meantime, paper prices can change at any time. So you can reach a point when China stays costly, the West stays cheaper, and there is still a gap. That gap that keeps coming up can bring in arbitrage, but only if the pipes are open. What happens now? The pipes aren't fully open? What's going on? If exports or imports are not encouraged, are slowed down, or there is too much paperwork. Bottleneck? Then the gap can stay there longer, and that gap that keeps coming back can stay pulling on whatever stock is already there inside the country, which gets you go back to the vault and pull down. Now, add on top of the idea that there's a huge short position. If you're short in a market that can be delivered in person and the warehouse is emptying out and you have a problem, your door gets smaller as you leave. Even if you never plan to give, the market starts to take into account the risk of delivery cost stress. And that risk premium can go up when costs go up in the area, more changes in value and prices that go up without warning. That's why this is important all over the world, not just in Shanghai runs the world, but only because stress in one part of a global market can change how people act in other places. Now let's talk about what you should be careful this week in particular. First, listen to what the news says. The stock in Shanghai stays the same, or a way to think about the risk of changes in the price of silver keeps bleeding. If it stays the same, the story of panic is losing steam. Second, keep an eye on whether Chinese silver-linked products keep hitting their limits, or if trade goes back to normal. If there are limits, keep getting hit, and the dislocation stays. Third, be on the lookout for any official terms related to investors, market order, protection, or trade that isn't normal. Those phrases often come before stricter rules, and stricter rules can make things better changes. Fourth, watch the premium. Know the action, not the exact amount. Does it mean that things will quickly get back to normal? Be stubborn and hang around. And fifth, pay attention feeling. When everyone starts to say, that's usually when the next thing happens. Things happen when everyone gets going. That's usually when you talk to the moon. The floor falls out. Okay. Now I want to talk to the people who did it directly. Okay, with all the craziness that just happened, some of you sold into strength near the top, and you deserved the victory lap. Some of you bought earlier and are now sitting on achievements that still seem unreal even after the pullback. If you do well, please tell us about your success in the comments, so that other people can stay motivated. And for the people who didn't get it right on time, welcome to being a person. Silver is not it's a staircase with a straight line. Steps that aren't there. The most important thing is not to get lost. One violent move with the end of the story. The Shanghai stock market is conclusion and disclaimer. It's a true story, and I'm saying if and then. The next few chapters are about getting things. Where did the metal come from? Does it come from flows of recycling? Does it come from miners moving things around? Does it come from selling shares? Somewhere else. And that's where the global part comes in. There is a lot of silver, not like the oil supply. You can't just turn a switch and a pump will do the trick. A lot of silver mining comes because of other mining. That means take longer to answer. Recycling. It helps, but it's not a magic faucet, and demand from business doesn't wait to make your price chart look better. So if China keeps pulling, someone else will have to do it. Must compete. That's what competition is. Changes the price. But I also wanted to be clear, none of this guarantees a straight-up rally. The markets can stay crazy longer than you can feel at ease. They can shake you out 2 times before doing what you thought they would do once. They can also end with a whimper if the premium goes down and the stock price goes down. There was only one draw, so I'm selling you certainty. Awareness is what makes you aware, keeps you from being played by the next headline. I'm going to stop now. This is the simplest way I can say it. Give you. The rumored silver in Shanghai stocks dropped a lot in a short amount of time. The price of silver in China the price has been higher than what is typical in the West. Standard points. At the same time, there was a lot of change. Made exchanges raise their margins and rules that limit. At the same time, there are talk about a big short that might become a problem if the body is too tight, keeps going. Those are the things you need. What the market does with them, the ingredients will depend on what happens. Next, if the inventory keeps draining, and if the premium stays wide, and if any big player is forced to change their behavior. So keep your look at the boring numbers. The boring data is where the real story is. And if you want more of these no drama, you know what to do when fluff stops working. Sign up so you don't miss the next one. Please update because this one isn't finished yet. Yes, only for learning, not for money. Advice. I'm going to tell you what I think the data and how the market works. You can pick what to do, so I don't know what's going on with you, telling you what to buy or sell, and you should always do their own homework or talk to a licensed professional before you do anything. Taking real risks.